Good morning, everyone. In this session, we are going to discuss about real estate fund accounting. But before uh, touch to the accounting parts, I would like to discuss about what is a real estate fund. So let's discuss about real estate funds. See, a real estate fund is a setup to invest in a real estate assets for the benefit of institutional and retail investors. It is a setup and managed by an investment manager experienced in the real estate business. The fund invests in real estate companies and other real estate investment funds which own, manage, and lease out the real estate assets. If I talk about real estate assets, it could be home, buildings, REIT means real estate investment trust, securities, open plots, roads, then universities, resort, or even shopping malls. Basically, private equity fund managers pull investments from the fund investors and invest funds across different assets. So that's how basically real estate fund works. Or when someone asks like, what do you know about real estate? So you can tell this: if any fund is intend to create or establish for investing into the real estate assets, so that funds we can call it as a real estate fund. All right. So in a real estate funds, you can see different classes, right? Class A, Class B, Class D, and Class C. So let's discuss about Class A and Class D, or Class B or C. If I talk about Class A, Class A which is for high quality assets, right? Very high quality assets, which is located in a very prominent area. For example, let's say if I talk about Pune, Pune like PCMC, which is rich area, or Koregaon Park, which is rich area. So it means that particular asset which is located at a very prime location, so that assets you can categorize under Class A. What about Class B? Class B buildings are older than Class A and may need some minor renovation. Additionally, they are typically located in a good or not a great market, right? So those assets you can categorize under Class B. What about Class D? Class D means buildings are the lowest quality and they are old and in need of a significant renovation or redevelopment. Those assets comes under Class D. Class C category, which is for the buildings in this class like are older and usually need of significant work, and also Class A buildings are located in a less desirable area. So it means could be remote area or outside the city, right? So those assets comes under Class C. All right. So now, apart from this, guys, in a real estate funds, see, the investment strategies are also important. If I talk about investment strategies, there are strategies like core, core plus, opportunistic, and value add. So these are the strategies which you can see in a real estate private equity investment fund. So let's talk about core strategy. What is this core strategy? This strategy focus on Class A real estate opportunities that are well located, typically in major metropolitan areas like Mumbai, Pune, Hyderabad, right? And these properties require minimum improvement, and the investment is considered a very low risk, and the properties are usually already fully leased with stable cash flows. So in terms of return, you may expect around 6 to 8% returns annually in this category. The Blackstone Group, one of the world's largest real estate investment firm, Blackstone employs a core strategy, or its real estate income trust, focusing on high quality office buildings in a retail spaces and apartment complexes in top tier cities. All right. Then second, the real estate investment strategy is core plus strategy. A core plus strategy is similar to core, but it involves slightly riskier assets, usually Class B properties, and it requires some moderate improvements or upgrades to increase cash flow, and value. So in terms of returns, you may see around 8 to 12% returns annually. Example like Brookfield investment in the Brookfield Property Partners portfolio includes Class B office buildings and retail properties that need improvements to increase their cash flow potential. And these properties are in a strong locations, but they may require some cosmetic upgrades or repositioning in the market. Third strategy is opportunistic strategy. Basically, opportunistic strategy investment, are at the very, highest risk, highest reward strategy kind of, you can say, often targeting classic properties, underdeveloped land or distressed assets that require significant redevelopment or have a high vacancy rates. And these properties may be in a declining or emerging markets requiring major renovation, zoning changes, or even a complete redevelopment. If I talk about a real life case, in 2012, Starwood acquired the St. Regis hotel in New York City, which required substantial renovation, and they used this hotel as an example of their opportunistic approach and significantly increasing the value of property and ultimately selling it for a profit after the market stabilized. So this was third strategy, guys. And the last one is value add strategy. The value add strategy involves investing in a properties that require significant redevelopment or improvement. And these are typically class B and C properties which may have underperforming cash flow, and the goal is to enhance the property through renovation, tenant improvement, or even changing the property's function and sell it at a higher price. Typically returns would be moderate to high returns, and typically in the range of to 18% annually. Heinz, this again, it's a fund acquired a class B office buildings in San Francisco, repositioned it and converted some of the office space into the residential units, which significantly increased the building's value and cash flow. So this was all about real estate private equity, the investment strategies. So I hope you like this. It was again intro session. In next session, we're going to discuss about, the very critical things like cap rate, vacancy rate, or net operating incomes, ratios, and all of that. So let's wait for some time. And, please don't forget to subscribe to the channel, because we're going to post lots of valuable content which you can, go through and enjoy it. So thank you very much for watching this. We'll see you in next session. By the way, we have launched 100% job assurance program. If you are really interested, please don't forget to sign up. I'll give a link in the description, so you can click on the program and see the details. So as of now, we are offering job assurance, 100% job assurance for investment banking and fund administration program. If you are really interested, please click on the link below, and even connect with the experts as well if you need any information. Thank you very much for watching this. We'll see you next session. Thank you.